Welcome to Impact Farming, where we introduce you to the people and ideas that will have a massive impact on your farming operation. Brought to you by Farm Marketer. Sit down, start the engine, and let's roll with today's show.
Hello, everybody, and welcome back to another episode of the Impact Farming Show. Today, I am so excited to have Bonnie Kluthe from First Acre Insurance joining me. Bonnie, how are you?
Very good. Thanks, Tracy. I'm excited to be here as well. Anytime I get to plug First Acre makes me very happy.
I am so excited too. As a media host, as a farmer myself, when I was researching this, I'm like, this sounds interesting. So let's chat. I'm going to open with a quote that you said to set the stage for the conversation. Here it goes. The insurance industry has not always kept up with the realities of 21st century farming and has been slowly failing this sector, the agriculture sector, for years. So I think that's a great way to start the conversation. And we're going to talk about First Acre Insurance and everything that you guys do. So let's dive in. Bonnie, tell me about who you are, your background, and then share with us who is First Acre Insurance.
Perfect. So I was raised in Edmonton, was raised in Edmonton, but we had a hobby farm. So everybody went to the lake. I went to the farm and worked. We had Black Angus cattle and hay. I then, a little bit older, met a guy and married a farmer. We live northwest of Morinville, where we reside today. We're winding down operations because our children are really not interested in farming, which breaks our heart, but it is what it is. But we used to do finishing hogs. We had about 800 per barn. We had a 450 cow calf operation, and we backgrounded in the winter. So we fed about 1,500 head all year long, and then grain about 5,000 acres. I personally have been in the insurance industry since 1987, a variety of roles working with insurance companies, direct writers, and brokerages. I've been involved with strictly agriculture for the most part since 1999, selling farm insurance on the road, placing complex agricultural risks, both commercial and actual farms, and then leading an ag team of 16 for a large farm insurer and growing that business from 7 million to 42 million in 6 years.
Wow.
First Acre came along, and it was a startup. It was a brainchild of two Canadian mutuals. So Red River out of Manitoba and Commonwealth Mutual in Ontario. They felt they didn't have the resources or the expertise in-house to do the research and development to advance farming. So I was hired for my agricultural expertise. And so here I am today. I'm the VP of Business Development, working with a team of 3 other people on our executive team. And we put together First Acre. So it's a digital play on a complex product in the insurance market space for agricultural insurance.
Okay. So let's talk a little bit deeper about First Acre Insurance, who you guys are, how it's different than what's out there, and then the types of insurance that you offer and what you cover. That's a big question, I know, but take it away, Bonnie.
Okay, so First Acre, we offer a digital, as I said, so it's end-to-end quote bind issue within the platform. We do personal lines, commercial, and the agriculture on one policy. Okay. We are an agricultural carrier, I guess, for better lack of a word. So you have to have agricultural operations in order to come to us. We won't do standalone commercial. We won't do just personal on the farm. We want the agricultural. We're a specialist in the way that we have looked at small, medium, and large. We are not interested at this point in the hobby farms. We're more the larger grain. We cover pretty much any type of farm except confined livestock. So we do have some capacity for that, but not a lot. Mushroom farms, greenhouses, or wineries. So we're really after the working farmer that's out there in the harvest and in the springtime seeding. That's kind of who we're after, the beef guys, alpacas, and whatever, anything but those few. We sell our product through a very selective broker network, which isn't usual for MGAs. So we're technically an MGA, which is a managing general agent. So we basically put products together, get wordings together, pricing, and then we go to insurers and sell ourselves to them, basically get them to believe in us and what we're doing, and then they give us capacity by way of how much per 100 feet of separation will they support us. So on our paper, for instance, we have 4 companies. They're all AM Best rated, and they have a percentage of our business on every single one. So we instead work with agricultural brokers. So these are experienced brokers. We felt that they would give us good feedback. And then we take that feedback and we turn it into product or revisions on a product and get them happier, I guess, and moving forward with their business and making hopefully things easier for them to sell what they are looking to put on their books. So our appetite is larger operations, and again, not hobby farms.
Okay. And we'll dive into the intricate details in a moment. What I want to ask you, let's speak about the industry as it is. And then you've been in insurance for a long time. So I'm curious the moment I'm trying to get the entrepreneur story out here because I love it. Our audience loves it. So where, what, when what were you doing? How did this come about? When did you guys realize that agriculture insurance isn't working? Something needs to change. Talk to me about that. I want to know that.
Okay, so when I first started with First Acre, there was 4 of us. So we had a head of product, head of IT, our CEO, and then I was the head of business development. We sat around. We thought we were going to be to market really in a short window of time. We were going to find some gap in that market, get some wordings together, and get out to market on that. Then we started talking to brokers and farmers from Ontario to Alberta, and that was not what happened. They told us, the brokers told us, there's no capacity, there's no appetite, like appetite is shrinking. So what insurance companies are writing and how much money they'll put towards that. So policies were becoming a lot more involved. So they have to go talk to several different insurers to get one risk placed due to the value that's on site. Farmers told us they hate insurance. They want to be fully covered and they want it to take 4 minutes a year. Some of them had claims experiences that weren't well or weren't a good. I mean, it's bad enough you have a claim and then you don't have a good claims experience, just adds to that stress. So as we're sitting there, we're thinking we're going to do market, and then we're like, oh my, now we're doing a full product. Farmers also told us they had commercial operations. So maybe they were electrician or they were building fence or their wives were cooking pies, and they had to have separate policies and then separate expiration dates. So now it gets to be a lot more work for them, and they have to keep on top of these things. They want things to come up once a year. They want to deal with it 4 minutes, and they want to know what they're covered for. So, okay. So that's how we started.
Okay.
Yeah. And so when to find out that traditional, so there was a couple other instances at home. So when I was involved in a large complex meetings, when I was managing Western Canada for the insurer, it was really a choice to pay out on the claims because the wordings were vague or not quite right.
Yeah.
So the amount of ex gratia requests were shocking. So that's ex gratia is when a broker comes to the insurance company because there's a gap in value or coverage not available or no coverage requested by the insured or the broker. And the broker asks for consideration from the insurer to pay that. That shocked me. And there was a lot more than you would ever think. The other thing was when I was discussing co-insurance penalties on losses, and we could talk about this more later, but I always go back to what would my husband think? My husband's a farmer. He thinks you tell them and you get your full amount and that it is. So we have an old shop on site, and they had like a low amount of coverage. So let's say 40,000. And my husband farms with his brothers. They said they'd be happy with 40, even though the replacement cost was so much higher.
Mm.
So if they would have had a loss, they had it nowhere near the replacement cost. So then you have a co-insurance penalty. And I tried to explain that to them, but I wasn't the broker. So they didn't quite want to listen to me. I'm too close to home, I think.
Yeah.
And then one of the farmers we talked to about First Acre, he described having a loss on a piece of new machinery he bought in the spring, insured it for the full purchase price, and then had a loss within 6 months. He ended up incurring a large co-insurance penalty due to the difference in the Canadian to US dollar plus COVID. And it was shocking. And they were so disappointed in their broker and in the insurance company. And quite frankly, I don't know that the disappointment, I think it's just sometimes explanations are beyond what the farmers are looking for. They don't get into the nitty gritty, or they're thinking, oh, I've got, $40,000 coverage, I'm good to go. And then they find out in a claim situation that they're not. And that's devastating. A, you got the stress of that claim. And then B, you're not getting what you thought. So now you have to put out more personal money or farm money that you were allotted to inputs or whatever to deal with this claim.
Okay. I want to ask you something, and then I want to maybe dig deeper into the farmer end and the broker end.
Sure.
So just to clarify, First Acre Insurance, the number one thing at the top, it's one policy that covers everything. So as
Correct.
a farmer, from what I was reading and what you said, your personal is covered, your farming assets are covered, and then if you have a side business, that's all covered. One policy, not three different policies and all
Correct.
odds and ends. Machinery,
Yeah.
livestock, all of that, one policy. That's
Yeah.
number one, right?
Produce, commercial stock, your tools for your business, your tools for the farm, all one policy. Yep.
Okay. And you guys do agriculture and only agriculture, which I think is a huge point that I wanted to mention, right?
Yes, that's going to be our specialty. We're only interested in agriculture. There's a lot of other companies that do everything else, but to have someone really specialize and understand agriculture, we're also part of the data. The thing in the Canadian farm industry, there's not a lot of data for insurers, and that's what we're trying to do. So we can end up more accurate with more information. So as we insure these farms and we collect the data, they're all going to be categorized correctly. So then, if you have a disc that you're never going to have claims on, why would you pay the same rate on that as a combine, which is, going to have ingestion or fire or whatever? So, how can we separate those out and make it a lot more accurate and more understandable from the farmer's perspective?
Oh, I love it. It's really working for farmers, understanding farmers, and helping farmers. I love it. You mentioned a word that it kind of struck me. These companies don't have an appetite to deal with farmers. And us and insurance, we found that too with our guy.
Yes.
I won't say companies. It's just like, eh. And I have a broker friend as well. And he's like, oh, a lot of these companies don't want to insure farmers. It's like, it's a hassle. They don't understand it. They don't want the business, making it challenging for farmers. Is that true? Is that kind of a good summary or no?
Yeah, I don't want to say that it's all companies are like that.
No.
Right? There are some that specialize and really do enjoying the farmers, but there is companies, it almost feels like it's an accommodation class of business. They've got a huge book of commercial or a huge book of personal, and then they do the farm just to help their brokers out. I would agree with that to a certain degree, but there are companies that do like to write farm and are very much into writing farm.
Okay.
And, because there's a pile, especially in Ontario. So Southwestern Ontario, there's a lot of mutuals out there. They've been writing farm business for, 120, 130 years. Okay. Right. There's other companies in Western Canada, Canadian companies. There's US companies that come up and write it. So there are guys that want to do that, but for some of them, it is accommodation or they don't write it at all.
Okay, so it's really just specializing all in one, knowing farmers, working farmers, and we're going to get into it in details, all the different areas where you guys shine. So,
Right.
okay, thanks for answering that. So, you went into it a little bit already. Some of the frustrations that farmers have, the headaches, and
Mhm.
the fact that they often find out about these small print after they don't understand, or it wasn't made clear, whatever the situation is. Do you want to speak about that a little bit deeper?
Sure. Yeah. So I think like from my perspective, I see underinsurance and co-insurance is probably the two top headaches for farmers. And of course, they only find out when they get into a claim situation. So usually there's an 80 or 90% co-insurance clause on a policy for your, outbuildings, machinery, livestock, produce. On your homes, it's usually 100, but your homes get guaranteed replacement costs, which means uh depends on the company you're with, but for the most part, if it costs the insurer more than what you have it insured for, they're willing to pay that price because you insure it to 100% of whatever your broker does a valuation on your home. You insure it to 100% of that, you get guaranteed replacement costs. That's the only item on there that gets guaranteed replacement costs. So usually when you have actual cash value or replacement costs on the other items, it's usually an 80 or 90% co-insurance clause, which means you have to insure that item for 80 or 90% of either the replacement cost or the actual cost value in order to be paid out the full amount of the insurance or value you have on that policy. In the event the item isn't insured to those values, there's a partial loss, the insured or the farmer would be subject to a co-insurance penalty, which is the equivalent to the gap in the insurance value versus the gap they have it insured for. So let's say you have a building has a replacement cost endorsement on it and it's insured for 50,000, but the replacement value is actually 100,000. So the building is really insured for half of what it should be. In the event of a total loss, the payout would be 50,000 because that's a total loss. But in the event of a partial loss, let's say there was a windstorm that took down one wall and the damage is $25,000. At a 50% co-insurance penalty, the payout could be as low as 12,500.
Oh,
Insurance to value is critical, and having the right insurance advisor to ensure you understand your policy is so important. Farm insurance is so complex and getting more complex with the values and right. And working with someone who understands your assets is so important. So, as in a lot of cases, you get what you pay for. And sometimes the cheapest insurance isn't always the right choice.
yeah. Well, and one thing I wanted to clarify, especially I'm thinking, well, anything nowadays, from when you bought it to now, prices go up too, right? So let's say you
Mm-hmm.
bought an item for this amount,
Yep.
you get replacement value, right?
Yes. So we do things a little differently. We do it on agreed value. So our policies on the home is on guaranteed replacement costs because that's the best coverage out there.
Yeah.
On our farm property and commercial property, we do agreed value. So that means what you have it insured for on the policy. So let's say you have that building again, you have it insured for 50,000. It's worth 100,000. That's really your decision to underinsure it. The max we're going to pay on any claim is 50,000. So if that building is a total loss, we'll pay 50,000. If there's a partial loss, the maximum we'll pay is 50,000. In the event you have a piece of machinery on there and that machinery is worth 250,000 when you purchased it, and then 6 months down the road it's worth 320,000, because it's agreed value, we aren't going to charge you any co-insurance. There's no co-insurance on our policies. You're going to get that full 250,000 when there's a loss,
Okay. Okay. Thanks for
if that makes
clarifying that.
sense.
Yep, that makes sense. Okay, perfect. So you also, in addition to talking to farmers and learning about farmer struggles, you spoke to brokers about being in a struggle and struggling to insure farms. Can you share some of the feedback that they gave you?
For sure. It'll be pretty general, but yes, I can tell you. So farm insurance is a lot of work. from meeting with the farmer and his wife or other partners, getting the information, taking the photos, sending the information out to insurers for quotes, getting quotes back, assessing and assembling the quotes and the presentation materials needed to present it to the client, finding out if you win the business, then actually turning that quote into a policy. It's just so much work. The top items we heard from brokers is that they were getting declines on risks with no reasons.
Oh.
Capacity is shrinking in the marketplace. So capacity is how much insurers are willing to put money-wise on the line. So the larger the farms get, the more insurers it takes to get coverage in place. And it just adds so much to that work list that I kind of stated above. And appetite is shrinking in the marketplace. So some agricultural operations are very difficult placed due to their total insured values, losses in that class of business, maybe a lack of risk within that class of business. So a good example of this would be like hog farms. So tough to place right now in the Canadian, in any market, honestly. But why is that? Well, the barns are within 100 feet of each other and they're usually connected by a walkway, which means the values are substantial. So even when there's a loss or a partial loss, it hurts all the insurers that are on that risk. On top of that, there aren't a lot of hog farms left in Canada, so there's not enough premium dollars to cover those losses in that class. So hogs is probably one of the more difficult ones. Mushroom farms would be along the same lines. There's a lot of total insured value within a very close area, and it makes it really difficult. Of course, if they've got good losses, it makes it a lot more appetizing for insurers. But yeah, hog farms are so difficult, and it's due to the losses. And I have a subscription to barn fires in Canada, and it's very sad, I guess, the amount of livestock that's lost every year in Canada due to fires or windstorms or whatever. I would say fire is the most devastating, and it costs insurers. You think about that. It costs insurers millions of dollars in that one little location. Because even if you look at some of the dairy barns and, some of these farms are getting so big where they're milking 2,000 head. Well, 40 years ago, we didn't have that. But now these farms are popping up and there's fires. Like, where are these fires coming from? They're done up to code. They're clean. Like, what is happening at the farm level or at the, just how do you possibly make it a profitable class of business? And that's hog farms were the prime example of where everything just got so big and the class of business just reduced so much that it's hard to make money in that class. I hope I explained this good for you.
That's great. And actually, Bonnie, I'm so glad you said that, because when I asked about the appetite for brokers to insure, the part I didn't say in my head was hog farms. The broker I knew, there had been some hog barn fires in the area, and he said it is getting so hard to insure these, nobody wants to cover it. So the part I left out, and when I asked you about the appetite, that was specifically about hog barns. So I'm glad that you brought that up.
Oh, awesome. Good.
Yeah. Okay. So why don't we dive into the nitty-gritty, the specifics about what you offer and how that helps a farmer. So I have a list of items that I researched that I want to ask you about. So I'm going to name it. And then if you kind of want to just chat about it and share what that means to farmers. So absolute flexibility versus traditional with little flexibility. What does this mean to a farmer?
Yeah. So when I think of it, I would say that large ships turn slowly. So the large insurers, they just aren't flexible. And part of that is their systems that they have in. I mean, over the last 5 or so years, insurers are all changing to different systems because they had old DOS legacy systems in the past, but now they're getting into more modern systems. But at the same time, when you have hundreds of people, it's hard to change your appetite, what you're doing. Whereas it's just not the same as a small, agile team of people who are focused on broker and client feedback and working to change how that insurance is done. So at First Acre, we have maybe 16 people now. Most of them are developers, so they're working on platforms. And yeah, for the most part, if a broker phones me and says, "Hey, Bonnie, like we're having issues with this," I bring it up to product, to the management team. We have a discussion. And if there's a way for us to fix it, we get developers on it and it gets fixed right away. I mean, we're not perfect and we don't get everything done, but with the large insurers, they just don't have that agility or flexibility.
Okay, excellent. I love that. You spoke about this a little bit earlier, but let's go there again. Agreed value insurance. What is that? What does that mean?
So it's exactly what it says. The insured, the broker, and us agree to the values before the policy is written. There's no co-insurance, and we pay out in total losses the amount insured for.
Okay.
In partial losses up to the insured value, there's no finding out after a claim happens that you were underinsured, and that you're not going to get the amount on the policy. The policy, what the policy states is final. Everybody's on the same page. A claim happens, everyone knows the value of that asset. And it's a matter of if it's an insured loss or not, or if it's a total loss or not, and what the loss amount is. There's no haggling on values after. We all know what we're talking about, and so much less hassle and a much better claims experience for that farmer or insured.
Okay. Versus that copay where all of a sudden you're like, this
Yeah.
needs to be replaced, and now I'm on the hook for the difference, right?
Right. Well, and COVID was really a big mitigating factor in this. So over COVID, things appreciated like we'd never seen farm machinery appreciate, right? The US dollar versus the Canadian dollar is such a huge factor. Just being able to get parts and or machines. I know we had ordered a swather in 2021 and we finally got it delivered in December of 2023.
Wow.
So, everything just escalated and got a lot worse, quite frankly, for everybody. So, doing the agreed value now on that piece of machinery, you know what? At the end of the day, there's no paying your deductible plus, 30,000 or 22,000 for that one gentleman. I think it was a baler. There's none of that. It's like your deductible. Here's your check. If it's a total loss, let's all move on and, go find your machinery and let's get your harvest or your seeding done.
You know what? That right there, it sounds amazing. As a farmer,
Mm-hmm.
we've had claims. We've had friends whose balers burn, good old baler fires, combine
Yes.
fires. And isn't that just insult on injury when something burns down, needs to be replaced, and all of a sudden you're stressed, you're without that, you have downtime, and now you got to haggle with somebody about
I
values?
know.
Like
I
yucky,
know.
right?
That's the tough
Poor
thing.
Bonnie, you've
Like,
heard this all your life.
I'm like, oh yeah. Well, especially when I was out selling farm insurance, it's
Right.
I swear some people bought because I found their place because they gave me but the other thing was when they had a claim and they start talking to you about that claim, like I finally had influence where I could change that for
Yeah,
farmers, is how I feel, right?
that's
And
great. That's
it,
sorry. Yeah.
yeah, and when we're talking to brokers, it's kind of funny watching the looks on their faces as we're describing our product and what we do. And they're like, so I have two brokers on my business development team. And they're like, I know it sounds like insurance, how insurance really should be, but isn't. And the brokers are talking to are like, you're right. You're 100% right. So it's funny watching people absorb what we actually do. And they're like, oh, I can talk to my farmer about this all day long.
Isn't that true? And I'm just,
Yeah.
well, you're seeing me work through it as Farmer Tracy, where you're putting
Mhm.
yourself in that situation and you're like, oh, and now I got to haggle with somebody. You got to fight with the
Yeah.
company. And same for
You
the
got to show
broker.
all your records for your, what you did for, what do you call it, maintenance for the
Oh,
last three
right.
years to show it was properly maintained or the hours were low. Like, there's none of
Nice.
that
Nice.
here.
We
Hmm.
agree. It's 100,000. That's what you get paid. Agreed
Yep.
value insurance. How
Yep.
straightforward and beautiful. And I could
Yes.
imagine from the broker aspect too, wouldn't that make their lives easy? Because they're
Yes.
the saying, don't shoot the middleman or
Messenger.
the
Yeah.
messenger. They're the
Hmm.
messenger, right?
Yeah.
Okay, perfect. So I love that one. And I wanted to really highlight that because I think that's a really big part of what you guys do.
Yes.
Seasonal coverage. Do you want to speak to that?
Sure. So I think it's referring to peak season coverage for produce or commercial stock on the policy.
Okay.
So that means you can insure it for an amount that you may have on the farm all the time. So I don't know, something easy as bales. You might have, 10,000 in bales, but from July or August 1 to November 1, that may go up to 600,000, 700, a million, whatever that number is. So you can actually increase it slowly. So you can pick like August 1 to September 1. Let's say you're going to do X amount of baling and it's going to be worth 100,000. So you can increase that and then you can decrease it on the policy. So you don't have to insure that $1 million year round. You actually can choose what you're doing and about your feeding time so that you can increase it and then decrease it. And it's on there all the time. You never have to mess with those numbers or the dates.
Okay.
So this year it's, September 1, it's 100,000, but you have a loss. So now we're going to work through a claim with you on that. And then in October or November, you can build it up and drop it. You never have to report it. Away you go. If you have a loss, we have professionals that are trained in our wordings and they come out and see you and you work things out with them. So
Clever.
it makes it a lot easy. So you don't have to have a full amount. Because I know in the past it's called reporting. And then we had to have farmers give us, all their, the instance I'm thinking of is they had corn, canola, wheat, and barley. And they had to give us each month what they had. So that means they had to go through their records and it was kind of a pain.
Right.
So anyways, you don't have to phone your broker. You simply choose the amounts, you set up your time frames, and the broker can set up the peak season for any of the produce. Some brokers or farmers are using to do, the reporting is a tough one. You don't have to send us inventories on a constant or annual basis. So sometimes they're phoning in and out. We find a lot of potato guys like this.
Oh, yes.
Right. Yeah. And the grain guys, if they're insuring grain, they would need to have, in order to have produce coverage for spoilage or anything, you need to have alarms in place. But generally, you can do this with anything, bales, even your fert and chem, maybe your seed. You're buying seed from Pioneer and you only have a lot of it from April 15th to June 1st or whatever, whenever your seeding is. You can put it on there and increase it for that time to allow for that seed.
I never thought about the seasonal component and values on commodities and agriculture, like haymakers, custom haymakers and sellers. It would be their stock would be here from the time that they get it off the field till the time is gone. The rest of the year they have nothing. One of many examples, right?
Yeah.
Wow.
Like all of produce is basically reporting, right?
Yeah. Okay.
Yeah.
Very clever. So digital site mapping, do you want to touch on that?
Sure.
What that means?
So a site map of a farm is required by every insurance company. We just have ours done in the system. So you just drop pins and describe what it is.
Okay.
And your broker is actually welcome to download. So the map creates a list of the buildings, the information on the buildings, the values. There's comprehensive knowledge of the buildings before the loss. Your broker can also map the buildings the farmer wants coverage on. So a good example of this is grain bins. You might have 40 bins, but only 8 of them are through national leasing or whoever. You can choose to only insure those 8 or 5 or 3 or whatever, and your broker maps them or works with us to map them. And in the event of a loss, we have information on them. The adjuster has a lot of information at their fingertips before they even talk to the farmer. By the time they talk to the farmer, again, it's agreed value. We're figuring out if it's a covered loss and if it's a total loss, and away you go. It just totally takes away a lot of the heartache from that claim.
Nice. Okay. Wellness and legal advice. What is that about?
Okay. So when we were talking to farmers, the farmers were telling us about how much stress they have. And we were asking them what keeps them up at night. And they were all talking. I would have thought it was weather. They were telling us about the geopolitical strains these days, right?
Amen.
So we have a CYA package. And I understand the stress that farmers can be under. No rain, too much rain, tariffs, Canadian versus US dollar. So many things are dealt with on a daily basis on a farm. Then you add a claim on top of everything. So we have a CYA wellness. So we'll pay $10,000 for counseling in the event of a covered loss that results in counseling being required by that family.
Oh,
So the house burns down, the barn burns down, the children are stressed and need some help getting through that trauma. We'll pay for the counseling for that family. We also give the estate 10,000 in the event a life is lost due to the farming operation. So there's an overturn of machinery, and the 10,000 is to help them through. So whatever they need that for, funeral, counseling, maybe they'll take a trip as a family just to get away and sort through. So whatever they need that money for, it's there. We just write them a check. So within the wellness package, there's also a legal advice helpline, as well as an emotional support helpline, all done with one of our insurer partners. In the event the legal expense insurance is purchased, the legal helpline emotional goes along with the insurance and is off this, but calls are unlimited, and the legal helpline can give advice along matters outside of the coverage. So within that, there's a whole scheme of coverages for the farmer, including tax audits and all that, driver's license protection and things. But there is advice where you just phone in and they give you advice. It's trained lawyers or lawyers that are experts in the field you're looking for that can help you. And there's also emotional support. So emotional support isn't a crisis hotline, but they can refer you to someone that can help you right away. So in the event that it's a covered loss and you phone the emotional support line, they tell you about a counselor that can help you, and we will pay for that counseling that you and your family need. So yeah, something a little different. We understand that farmers are stressed. There's just so much hitting them these days, and we want to help out with that and make sure they're taken care of and their families as well.
that is so thoughtful. That's pretty cool. Okay.
Thank you.
Yeah, you are so welcome. I love going through doing the hot seat here. I have a few more
That's
for
all
you.
good.
Yeah, it's nice to just say, here's a feature. Tell me about it.
Yeah,
Real-time machinery evaluations. Can you speak to that?
I can. So we were talking about agreed value. So we support our agreed value. So this is within our platform, and brokers have found it really helpful. We have an API with a valuation supplier, and it's a general number. So, but it's based on year, make, model, serial number, I think it needs, and then value of the machinery insured. But it's very handy and gives the market, auction, and asking price for that same piece of machinery. So we could have made it really super accurate by getting a lot of information, but brokers and farmers have the time to do that. They'll do that on their own if they really want to know. But the nice thing is it tells the broker if it's over or underinsured, and that gives them the opportunity to speak to their client about it. So I helped a broker with a quote a few months ago, and they ended up binding, and we insured the machinery that was on there. But there was two 2007 tractors, and they were insured for like 60,000 or whatever it was. And when we did that, when we did the valuation, it popped up that they were actually worth 100, and it was double, like 130 or 137 or whatever it was. So the broker was like, oh, that's interesting. Went back and talked to the client, and they increased the values, not totally to what but at least now they're well versed on what they're insured for. They get agreed value.
Yeah.
So if it ends up that it's higher, they know that they're going to get that 120 or 125 for those tractors. And they're certainly not going to be disappointed at the 60. We help that farmer understand what that coverage was, and we're about supporting him. So there's no big surprises after a loss. So they were pretty happy about that.
You know what? That's the part that's neat. The surprise doesn't happen because with machinery and everything going up, as a farmer, if you're underinsured, $60,000, that is a big deal. And now you just dramatically changed your financial position because you were undercovered, right? And now you have new debt because of a bad situation.
Yeah. And for a few cents on premium, really, yes, it doubled its premium. But when you think of, it being like 25 cents per 100 versus a full 60, it's going to take a lot of years of premium to add up to the 60,000 that you were missing, right?
Yeah. Okay. Excellent. So one other one, you guys have the ability to cover several large multi-location farms under one policy. Is that unique to you guys versus what's out there? Do you want to speak to
Not really. It's just how we do it. So we have several insurers. So I think I spoke on this earlier about
Yeah.
AM Best rated. So financial institutions get rated based on their financial stability. The lowest of our capacity partners is an A minus. So they're all in the A's, A pluses. By having these insurers on our policies, we have larger capacity to insure the farm. So we look at the subjectivity of all property within 100 feet. So within that 100 feet is what your total insured value is. In order to make another 100 feet, you need clear space. So no trees, no buildings, whether insured or not, or anything. So if you have separate locations, now we're talking you have, X amount of dollars at this 100 feet, and you might have a second subjectivity or a third on that same location, but now you can work it out and figure out exactly what it is. And we even look at the machinery, and you can allocate machinery as you need. So if you have 4 locations, 10 locations, we just actually did a quote a few months ago with a farm that had about 40 million in machinery. They had it all separated out. They had a couple different locations, and it worked out well. Now we're ready to insure that and look at actually what we have.
Okay.
Yeah. So we look at the subjectivity of all property within 100 to determine how much we can insure. We can insure pretty much any number of locations, subjectivity groups within that location. And we take away the work for the broker on having to negotiate terms with multiple insurers because we have it all sorted out already.
Okay. Awesome. Thanks for sharing on that. I have one last one. So I'm going to ask you about loss of use, and then I'll tag on. Is there anything else within what you guys do that you want to touch on and tell our audience? I think we went through a lot, but loss of use, and take it from there.
Sure. So downtime on machinery due to a covered loss. So that's what loss of use is. We have several levels of insurance. So you can get up to 100,000 per incident in coverage without a daily limit. So we don't limit it to $1,000 a day or 10% a day. We also offer extended loss of use, which means that if a piece of machinery is determined to be a total loss, the usual protocols for the insured to stop paying for loss of use once they make an offer on that piece of machinery.
Oh.
We continue to pay for a custom contractor, the neighbor, or rental to ensure you get your crop in, your crop off, whatever your operation is at that moment. We know what the scoop is in regards to farm machinery. Getting replacement parts, finding a rental is very difficult and stressful. And again, here we're to support the Canadian farmer. So we're the only ones that has the extended loss of use. We've sold it, I think, pretty much on 100% of our policies. The farmers were very, I don't know if excited about insurance, but they could see that we're trying to support them. There's a couple other things. We do have high liability limits, so we can do up to 20 million. We also have different wording on our pollution. So our pollution is usually on a limited pollution on a farm policy of 120 hours of detection, and you have 120 hours to report that claim for coverage. With us on the herbicides, we give 336, which is 14 days coverage. So that makes sure that, when you spray Roundup or whatever, sometimes it doesn't show up that you've done the wrong thing or there's overspray. We'll give you 2 weeks to find out that there's a problem there. Oh, there's so many other things. Our CYA, so usually on a farm policy, you get an enhancement package and it's pretty static. Ours is not. You get to choose what coverage, how much coverage you want, and what the deductible is. So you aren't stuck with, well water or whatever that's meaningless to you. You actually get to choose coverages that will pertain to your operation. And we have a lot of brokers and farmers very interested in choosing what they want. Nothing looks the same. Everything's individual because we feel that every farm is a little bit different. It's as different as the farmer running it, right?
Yeah. Okay. Perfect. I think that was a great run through, and you had a few more. Okay, so I want to, in the same vein, you started speaking about coverage and deductibles. Why don't we touch on that a little bit more in your buying process? So you work with brokers. Let's talk about that, and then we'll go on to the next question I have for you.
Sure. So farmers, So when I started in the insurance field, I think I started in personal lines in Edmonton, and I think deductibles were 200. Well, those days are long gone now, except for personal articles like diamond rings and that kind of stuff. You can put them on with zero. And I think farmers actually need to change how they think about their deductible. So, insurance has changed so much over the years, mainly due to catastrophic natural incidents, hail, wind, floods, especially in Alberta.
Yeah.
Well, I would like to say just Alberta, but let's face it, Canada has actually seen a lot of these. But I think farmers should start looking at their deductible as what are you willing to self-insure? With the way limits have escalated, so the problem with farmers, they complain about stuff going up, but machinery has increased so much. Building values and materials have gone up so much. So really, would you put in a claim for $1,000 anymore? Well, no, because you'll lose your claims free discount. You'll end up with, a higher price. And then it seems like for farmers, especially, everything comes in threes. So they have three claims in a row. They might be clean for 30 years. And then all of a sudden these three claims pop up and now they're having problems getting insurance.
Okay.
So yeah, so I would look at your deductibles, what you're willing to self-insure with the way limits have escalated, as we talked about. So if you can, as a farmer, afford to self-insure the first 5, 10, 25, or $50,000 of a loss, I think you should start considering that. And I mean, it depends on what your situation is. And I'm not saying everyone, but really, if you're a smaller farmer and you can insure the first 5,000 wouldn't hurt you financially, maybe consider looking at that because you do really save money, especially with us. We have actually fairly good rates at higher deductibles. But really, you should start considering what you would pay in house and not claiming the small claim. Would you report a claim that was under 5, 10, or 25? If not, increase your deductible. It saves you money. Used to be that the first loss was a freebie too with insurers. Not anymore. Not with the way supply chains, catastrophic claims are escalating. Insurers cannot afford to do it any longer. Why send a claim into an insurer who's going to incur expenses and then take away the claims free discount or add a surcharge when you could have repaired that item for $6,000? We get it. Not everybody can afford it, but if you can, maybe it's a way of starting to change how you look at your deductible.
Yeah.
And ensure your business is secure when you really need it. Like really, in my mind, some of the bigger farms, we should almost be like a cat loss. So they do have a wildfire go through and all their equipment. That's what we're here to do. But, you drop a glass vase and it's worth $1,000. Like,
Right.
Really, you don't want to lose your deductible on that.
I think that's natural. We've had that happen too, where it's like, okay, deductible, the cost, then your rates go up. Okay, we're just going to cover this one, right?
Exactly.
Yeah. Okay, my main curiosity, you have a digital platform. So can farmers buy directly with you or are they going through brokers?
Yeah, they're going through
Okay.
their brokers. So the nice thing about that is brokers have autonomy to put in what the farmer wants. They can actually take a laptop out to the farmers and go through the policy so they understand it. They can change deductibles right in it and hit reset, and then they get the new pricing. They can go through the extensions and decide what extensions they want. So that's the advantage of a digital play, is they have it at their fingertips and we're not shut. We're not here from 8:30 to 4:30 and then you can't get a quote. We're here 24/7. You have access to get pricing and changes to your policy, whatever you need.
And I think for several people in the audience, maybe even myself, we are still used to some brick and mortar and
Yes.
having a person. While we're very digital in this world and we can buy anything and farmers are comfortable, to me, I would almost think when we're dealing with such big numbers, let's say $40 million operation, I think the fact that it has to go through a broker might be a good selling point for a lot of farmers.
Yeah. Yeah. That's the thing with farm is it is very complex.
Yeah.
And would we love to have tried and done an experiment doing digital direct to the farmer for sure. But I think farmers still need the broker to help them get through the coverages. It's not so straightforward
Right.
that you can just do it yourself.
Yeah.
Maybe for your personal automobile is one thing. And if you just had a home, that's one thing. But really, when there's much difference in coverage and what you choose can affect what the payout, I think you need somebody to help you and
Yeah.
understand that.
Yeah, that would feel a little bit better. Having your person, having your office, and you just know you have that personal touch, right?
Exactly.
Okay. So I wanted to ask, you've named a few, is there a story? I love stories. We all love stories of farmers who had a loss and how your approach made a difference, or had they not had your policy, how it would have made a difference. You've given a few, but is there any one that comes to mind that you want to share?
Sure. Actually, I have a couple things that
Okay,
come to
good.
mind. So, we haven't had a lot of losses because we are fairly new. We just launched in basically February 1, 2024, but we have had a few. So, this is more about, I mean, they were happy with our claims, but I have some actually better examples. So, when talking to brokers, they all had a story about co-insurance penalties during a
Mm,
loss.
yeah.
So, we were talking about that farmer who purchased that machinery in the spring and insured it for a price and then had a co-insurance clause on the penalty. We would have just paid the full amount. So let's say it was a total loss, it was worth 130,000, 230,000. We would have just paid them. There would have been no co-insurance, right? We also heard from a farmer about having a $5,000 loss of use on their policy. So that was the max they could do per day, or it was either that or they had like 20,000, but they only had $2,000 per day.
Mm,
But renting a combine now is like $400 to $500 per hour. So they basically had 1.5 days of coverage, like 10-ish hours. And
yeah.
our minimum is 10,000 in coverage with the max of 100. No daily limits. You just go out and rent it. And we pay up to the 100, whatever limit you picked, 125,000, 75, whatever that number is, we'll pay up to that. If you use it on 4 combines in one day, whatever, if you use it on, a couple of months and by the time we get it all fixed, and then we have the extended that would help you after we make that offer. Now you have somebody you can go rent a customer, your neighbor, or whatever that looks like, and get your crop in, your crop off, whatever. So, yeah, there's a few
That's
that daily
powerful.
limit. Mm-hmm.
It's not even like you said, the item you lose, the loss of use, and the amounts and the replacement. Like all those things make a bad situation if you're wrongly, incorrectly insured. We take the item we lost, but
Yep.
that can almost become the minor part of the whole situation in farming, right?
Yeah, and you start piling that up. Like nobody really talks about
Right.
the stress that's contributed to a claim,
Yeah.
right? Like you lose your home, that's devastating enough. And then now you have to go through, and even just going through the process of rebuilding and picking out your carpet or your tile or whatever. Like it's just stress, 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 stress. And
Yeah.
how can we just help people make that easier? Like you're probably not going to get an Amazon experience through claims. Let's be honest. It's the worst time of your life. You might be at a low, no matter what that claim is. And you're stressed out. You're trying to get your crop in, your crop off, whatever, or you're trying to move your cattle and your liner rolls, whatever that is. It's not going to be an Amazon. You're not going to feel good from a claim. But if we can help ease it and just get you through that tough time in a way that's not so hostile or combative,
Yeah.
that's where we're at, right?
Yeah, that's beautiful. I think you said the right words because sometimes it feels like the insurance could be the enemy versus the we're here for you. We got you,
Yeah,
right?
yeah,
Okay, thank you for sharing those examples. Knowing farming and the risks and everything where we're at, is there big risks you see, things farmers should really be considering as they go to renew their policy? Do
yeah.
you have any thoughts on that?
I have so many.
So many
And I'm
thoughts.
going to sound a little bit like a broken record, but we are always looking at this. Like, we want insurance to value so problematic. It's with tariffs and whatever's going on in the world right now. It's just really a nightmare.
Yeah.
Fewer farms are getting larger, so the total insured values on farms are becoming problematic, especially when there are large values within 80 or 100 feet. So understanding those separation of assets, which makes them easier to insure, is key. We are really seeing a tech revolution in agriculture. So I always say agriculture and insurance are kind of on the same path, where there's a lot of mergers and acquisitions and they're getting larger. Like for insurance brokerages, it's good. It gives you more access to market. For farmers, though, now it accesses your access to market, or sorry, limits your access to market, where it's a lot more work to get your policy together. So farmers are much more technologically advanced and given credit for. So the precision of agriculture and data is starting to surge. And as insurers, we need to ensure we're keeping pace, if not ahead of the game. We need to watch for trends and updating. Ag insurance in Canada is coming from a long history, some of it not keeping up with the advancements. Ag data in Canada is limited. So, in the scheme of things, we're a small market. We're working with partners to build data and become better at understanding what agriculture in Canada needs. On top of that, working with brokers and their clients who are at the forefront of the changes, ensuring that we're going to keep evolving, and we are always going to evolve. That is never going to stop. We're going to keep growing, changing our product, adding products, changing how we do business. You know, brokers tell us so much about how they hate duplicate and triple entry. How can we alleviate that for them? So yeah, there's a lot to do in the ag sector, and it's big, complex. I love more zeros. The more zeros at the end, the more I want to help that farmer and make sure, you know, we're talking about assets right now. Part of that asset discussion should really be the land. We don't really talk about land because we don't insure land, but we do insure liability. If you own 10 or 15 or 20 quarters of land and you have 2 million liability, that day is done. You need to increase that, because if you have a claim that goes over $2 million, and it's usually on the auto side, the first thing they're going to make you do is they're going to go through your insurance, and then they're going to make you sell land to pay out that claim. So if I was a farmer, I would start looking at my liability limits and, get that in hand too. So if you have, you might want to look at having a 5 million underlying liability limit, maybe a 10 million, maybe you need 15, but you should really start looking at that liability limit too.
Bonnie, that was another gold nugget. I didn't even think of that. And to be honest, I'm going to go and check my insurance policy because honest to goodness, we know it's there. We know it's insured with our policies, but who thinks about it? Who thinks about the values? Who thinks about not actually being covered and having to sell your land? Like this is a
Yes.
snowball, right?
Yeah. Oh, 100%. Like at First Acre, we sell insurance, but in my mind, I stopped selling insurance in 1999. I'm all about protecting farmers' assets and how can we help them insure. Like things happen. I have a whole career because bad things happen to really nice people.
Right.
And people can say it'll never happen to me. I can tell you it does happen to people just like you. And if you get away with one where you don't have any huge losses in your lifetime, congratulations, because a lot of people are, they lose everything. They're devastated, whatever. And I have a career because it happens. And I want to feel, and our whole team wants to feel like we help our end user of our products through those tough times.
I love it. Bonnie, you are a gem. You have a wealth of information from so many years in the industry, seeing what wasn't working, what you guys can do to better support and protect farmers. I have enjoyed this conversation. I know our audience will have as well when they tune in. So if there is a farmer out there that's interested in learning more, buying the product, where do they go? How do they start that conversation?
Sure. They can start by, they're welcome to get onto our website
Okay.
at www.firstacre.ca, or reach out to us at info@firstacre.ca, and we'll ensure we give them a list of broker options in their area. or they can talk to their insurer. We aren't with every insurer or insurance broker, sorry. We aren't with every insurance broker, but there is a map. There's mapping on our website too, where they can go and see if there's someone in their area. But if they need some help finding someone, we'd be happy to help them with that.
I love it. Bonnie, thank you for your time. Our show mission here and the individuals that we bring onto the show align. My mission is to bring farmers the people and ideas and companies that will impact their farming operation. And while you and I can probably both admit, and farmers, we don't like thinking about insurance, but after talking to you, wow, you don't realize how good insurance can affect your operation and how bad insurance can impact your operation.
Yeah. Well, I just hope, again, we're about our end users. So I hope the farmers that are watching today really got a little bit out of that. They can always talk to, I'm sure their insurance professional, if they're specialists in the agricultural industry, can help them out with that. But yeah, I'm slightly passionate about ag. I think it comes from a lifetime of experience with agriculture. And yeah, I'm hoping I helped today.
You certainly did, Bonnie. I love this conversation. Thank you again. You guys in the audience, if you enjoyed this episode, like it, share it, and get it out there so other farmers can learn about First Acre Insurance and the work they're doing to protect farmers. See you guys next week. Bye-bye.
You've been listening to Impact Farming. For more great episodes and articles designed to help you manage and grow your farming operation, head on over to farmmarketer.com. Don't forget to sign up while you're there. We will see you on the next episode.